What do you think is next for the S&P 500? Are you all bulled up seeing the S&P 500 powering through 6,000 and beyond going into the end of 2024? Or are you noticing some signs to be concerned about with elevated volatility, divergences with breadth indicators, and you're thinking more it's a downside in Q4? Hey, I'm Dave Keller with Market Misbehavior, and this is the latest in our popular series of Choose Your Own Adventure style videos about the major indexes. The point of this video is twofold. Number one, to think about different scenarios, really, and stretch yourself away from your preconceived biases. The only way you can do that is by really thinking about different potential paths. What's the very bullish or the very bearish outcome over the next 6 to 8 weeks? What are some mildly bullish or bearish scenarios that could play out? So part one of this is to really think about 4 different scenarios, to stretch your thinking and realize that all 4, while maybe more or less likely, are all possible. And the second part is to decide which you see as the most likely scenario. That's probably how you want your portfolio to be positioned, but be ready and be wary for signs that one of the other 4 scenarios is playing out. So here's what we're going to do. I'm going to lay out the 4 different scenarios, talk to you about what those conditions might look like, what key levels and signals we might be on the look for. Think about those 4 scenarios, and then don't forget to drop a vote. Leave me a comment. Let me know which scenario you see as the most likely and why. Before we get to the 4 scenarios and their implications, here's one more thing I wanted to tell you about. I spent many years earlier in my career working for large financial institutions, and when I left the institutional world, I remember thinking, what am I going to do to replace these big, expensive, but powerful institutional investing platforms that I've had access to this whole time? There is an option now for individual investors and financial advisors, and it's called Koifin. Koifin really combines some of those great capabilities of the big, expensive institutional platforms, along with some capabilities really optimized for financial advisors and high net worth individuals, and puts it in a very low cost, underpriced package on a web-based platform compared to the possibilities that you can achieve by using said platform. One of the features I love to use on Koifin are the ETF holdings. You can take an ETF, you can, like the QQQ, you can look at the biggest weightings, you can look at weightings by sector, you can run some basic attribution analysis. So for ETFs that you own or that you're considering owning, doing the due diligence of really understanding the exposures you're going to get is super important and super powerful for your portfolio. If you go to marketmisbehavior.com/Koifin, you can get 10% off any new membership. I hope you will check it out, and I hope you will find it as meaningful and powerful and impactful as I have found myself. Now let's get back to the charts. All right, so here we're looking at the S&P 500 really over the last 12 months, and we're focusing here just on the last couple months, right? From that sell-off that we had in mid-July to early August, which now, year to date has ended up being the biggest drawdown of the year. And to be honest with you, not that bad, right? If we kind of measure down there, it's less than a 10% drop on an intraday basis from that mid-July peak to that early August low. So the biggest drawdown we've had is 10% so far year to date. So now all of a sudden, off of that August low, we've gone September, October, now almost to early November, 3 straight months, finding strength off of that low. And I've drawn a trend line from the August and September lows that lines up pretty well with the low that we experienced here 3rd week in October. So when we're thinking about the 4 scenarios, we have to think about that as sort of setting the table for this meal that we're going to have. Based on that trajectory up until now, what might we expect to happen next? Before we get to those 4 scenarios, though, let's look back at the last one that we did. This was the one that we did on July 26th. We shared 4 different scenarios. This was actually right during that July sell-off period, and we did it at the end of the July when we basically had that first leg lower. And the question was, what's next? And so we laid out a very bullish scenario, in which case we would recover right back above those July highs and continue even further. Then a mildly bullish scenario where we went slightly higher, kind of, didn't really continue the pace of the original trend, but kind of slowed down a bit, but recovered. And then some bearish scenarios where this was the beginning of a much deeper sell-off. Let's look at what actually happened. Well, For the next week, we actually sold off another big leg down. And so earlier in August, it actually looked like scenario 4 was even going to be under appreciating the severity of the sell-off. We'd actually gone below that sort of bearish trajectory. But look at what happened right afterwards. It ended up being a very noisy month after that. And August was pretty volatile with a failed attempt to break above the July peak and then a retest back to the lows from mid-July. At the end of the day, though, we're almost perfectly, after 6 weeks, right about where the blue arrow would have been for scenario number 2. So at the end of July, if you picked scenario number 2, the mildly bullish scenario, well, it probably didn't feel like it was going to play out earlier in the month of August. That ended up being almost exactly where the price hit. So congrats if you picked that. And if you didn't pick that one, if you picked scenario 1 or scenario 3 or scenario 4, it wasn't a total loss, because again, the point of this exercise is not to be right necessarily. It's to force yourself to think about different outcomes, to think about what a very bullish market would look like and feel like, what a very bearish rotation might look like, so that if and when you see those signs, at least you've already thought about them, right? I don't like to be surprised as an investor. I like to kind of think about things ahead of time, to sort of sketch out what these scenarios might look like. So then no matter what happens, I at least have thought through what it would mean for me and my portfolio. That brings us to our current discussion, which would be the next 6 to 8 weeks. We're recording this at the end of the week, October 25th, and the question is, what's next between now and early December? Now, before we look at the scenarios, let's remember there's a lot happening between now and then. We're still sort of in the meat of earnings season for Q3. We got about another week of a lot of S&P companies reporting, including some of the mega cap kind of Magnificent Seven names. So a lot of potential catalysts coming to play here. Early November, less than 2 weeks away, about a week and a half away, we have Election Day. Early voting is already happening. We already voted here in Washington State, or at least my family did via mail-in ballots. And so, between now and the next 2 weeks, hopefully we have some clarity about who the next president will be. And then we can start to make some greater assumptions about what that election outcome might mean, what sort of policy decisions could be made, what the setup of Congress will be, if it will be a friendly or more of an antagonistic relationship. And again, all of that just helps us to start to think about what may come next. Also, we have the next Fed meeting, which is in mid-November. So over the next 6 weeks, we've got earnings, we've got the elections, we've got a Fed meeting, we have a lot more economic data that's going to probably be coming out with potential market moving possibilities, and also geopolitical events that are still very active and uncertain. So it's going to be an interesting road. Again, I think the benefit of charts is to help us think about different scenarios and then just really sketch out what the trends could look like. Let's lay out the 4 scenarios from super bullish to very bearish. And again, keep in mind start to think about which of these you think is the most likely scenario. Scenario 1, the super bullish scenario, I would say is basically a continuation of the trend we had off of the August low. What's really impressed me about the market here in Q3, now going into Q4, is the bounce off of the August low, the pattern of higher highs and higher lows, and the fact that the trend overall has really gotten back to the upswing we saw in May and June, and really back to January, February, March, right? Q1 was just this nice, low volatility, slow and steady incline to the market. So the very bullish scenario would basically mean a return to like Q1, and Q4 and Q1 are very similar. That would take us, if we have a consistent pace to what we've experienced over the last couple months, that would take us above S&P 6,000 for the first time in history. So the super bullish scenario means we get above 6,000 by the first week in December. We make new all-time highs above and beyond what we've seen so far, and we're basically just wondering how a big correction has not really come, and that August pullback of 10% is probably the worst thing we'll see in the markets in 2024. Scenario number 2, sort of the mildly bullish scenario, means we still go up, right? We don't go down necessarily much from current levels, but we're not able to get above 6,000. That psychological level of a new 1,000 increment is just too much for investors. We talk a little too much about valuations. And maybe earnings start to continue to be underwhelming in certain areas, breadth conditions to continue to deteriorate, and even though some stocks are still going higher, probably the Magnificent Seven stocks are still holding up okay. That allows the benchmarks to remain quite strong. But even in the mildly bullish scenario too, we could start to see breadth conditions deteriorate a little bit more. Maybe that sets us up for more of a corrective move in December, January. And we're talking a lot about the weaknesses, the signs of weakness we're seeing going into year end. Scenario 3 is the mildly bearish scenario. That's where we don't get much above current levels. We start to rotate down a little bit. We really stay above this 5650 level. That's the level that I've talked about as sort of the line in the sand. For me, 5650, as long as we hold that, conditions just aren't that bad. But if we would break that, that gets us to a much worse sort of scenario, because that would mean breaking below recent swing lows, breaking below the breakout level from July and August. So it would suggest something a little more deep. The scenario 3, mildly bearish scenario, basically means we hold that level of support. We also, and I think very importantly, hold the 200-day moving average. Now, I've projected sort of a theoretical 200-day moving average. This is no guarantee that that's what it's going to be, but I'm basically just taking the current slope and projecting it forward a little bit just to give us a general idea of where that might be. That, of course, could change as market conditions change. But I would say one key point of scenario 3 that differentiates it from others is we don't get much further higher than this, but we remain above an upward sloping 200-day moving average. So mildly bearish probably still means the long-term trend feels pretty strong because we're not breaking down through those long-term measures of trend. The super bearish scenario, scenario number 4, means we sell off soon, and all of a sudden 2024 starts to look a lot more like the end of 2018, where Q4 was actually a rare but very powerful downtrend, a cyclical downturn. Scenario 4 would mean we break down through 5650 and we keep going. We break below the 200-day moving average. Now, remember, with either of those scenarios, the mildly bearish or super bearish scenario 3 or 4, remember that means the leadership trends probably start to change, right? Think about what types of stocks would probably do well in that environment. It's probably going to be defensive sectors like utilities, real estate, and consumer staples. These at times have shown signs of life, improvement, and relative strength. But, as we sort of continue through October, they're still underperforming the major benchmarks in recent months. Those bearish scenarios mean most likely institutions start rotating toward defensive positioning. Defensive sectors like utilities and real estate do much better than they have so far in the second half of 2024. And all of a sudden, we're talking a lot about yet another fourth quarter sell-off or yet another corrective move. It just happened a little bit later, right? Usually we have a September-October low. Maybe this low is just pushed back a little bit and we end up having a November or December low. That's what scenario 4 would really mean, would be a very significant sell-off, maybe at least along the lines of what we saw in July, maybe 10+%. But the good news is maybe that sets us up for a nice rally in the first quarter of next year. So those are the 4 scenarios as I see them. To recap very quickly, scenario 1, the super bullish scenario, the trend that we've seen off of the August lows continue. A lot of the themes that we've observed in terms of the strength of the Magnificent Seven, a lot of individual stocks making new 52-week highs, that probably persists as we see more and more stocks participating in the uptrend. And we, at the end of the year, look back and say, where was that big correction we all thought was going to happen in September, October? Scenario 2, the mildly bullish scenario, means we continue to push higher a bit, but the pace slows down. We don't get above S&P 6,000. That's a key to the super bullish scenario. So scenario 2 means we trade a little bit higher, maybe 5,900, maybe even 5,950, but we can't get above S&P 600. In that case, you probably see some stocks that are breaking down, even though the benchmarks remain strong. Scenario 3, maybe we have some economic data that completely changes the picture, but all of a sudden, all the optimism that we've experienced in September, October, we start to question. Maybe the election season is way more contentious than any of us hopefully would hope, and all of a sudden we're left with a lot more questions about the future path of the administrations and what sort of policy decisions they're going to be able to implement. Maybe the Fed meetings, we start to get some a sense that the Fed is going to have to change the course of the aggressive rate cuts that they've been implying, and all of a sudden the market feels like it's been way too optimistic. Scenario 4 means things begin to unwind very, very quickly. The lack of corrective move that we've experienced so far in 2024 finally becomes a painful wake-up call as we realize that markets can and often do correct in a pretty big way. In this case, it's sort of an everything rotates lower. I would say scenario 4 involves a big spike in the dollar probably, as there's a move to safe haven assets, and all of a sudden we realize markets were very overvalued. Investors realized they were pricing in a soft landing or a Goldilocks scenario for the Fed that is not all of a sudden possible or practical for the Fed to implement, and all of a sudden the optimism and confidence becomes pessimism and lack of confidence. Which of those 4 scenarios do you see as the most likely and why? Don't forget to drop me a comment below and tell me specifically why you think that scenario would play out. What do you think is that key indicator or key driver that would cause that one to happen? I hope this was a helpful thought process, this choose your own adventure style video, to think about some different scenarios. This is called probabilistic analysis, where we stretch our thinking. I hope your thinking was stretched. If you appreciate having your thinking stretched, thinking about how you think about the markets, and just a lot of encouragement to make better decisions, our premium memberships may be a great option. Go to marketmisbehavior.com/premium for more information. Don't forget to use the code YouTube when you check out for a special discount. For Market Misbehavior, I'm Dave Keller. Remember, it's always a good time to own good charts. Have a great one.